Hi, and welcome everyone to our roundtable today. We are discussing high yield in Asia Pacific. It's an exciting topic to get to cover at the beginning of the year. We've already started off the year with a bang, which is very interesting compared to where we were last year. The G3 public bond market volume in Asia ex Japan in 2020 was characterized by fewer larger deals, and those were largely investment grade deals. Issuers raised about $380.5 billion from 644 transactions. And that was compared to the 355.6 billion that was raised in 2019. But just 55.55 billion was raised in G3 high yield deals in 2020, according to Dealogic, which does show a drop from 2019. So we are now in a position where we can talk about how this year is going to hold up for our issuers, where the market is going to take us, and hopefully how we could see something different from what we saw last year. So to start today, we're going to talk about our expectations. Last week was a blowout start to the year for 2021. Is that going to keep up? Is this year going to be characterized by big volume? What are your expectations for the year? We have with us today, I should go down the line and introduce all of our speakers. We have Daniel Kim, Managing Director for Debt Capital Markets at our sponsor, HSBC. Also from HSBC, we have Jonathan Drew, Managing Director for Sustainable Finance, Real Assets and Structured Finance for Asia Pacific Global Banking. Also joining us today, we have Niraj Seth, the Managing Director, Head of Asia Credit at BlackRock. We have Annalisa Di Chiara, the Senior Vice President at Moody's Investor Service. Kailash Vaswani is the President of Corporate Finance at Renew Power, one of the issuers that will be speaking with us today. Our other issuers that have joined the panel are Azan Azmi, the Group CFO at Serba Dynamic, and Kenny Chan, the Chief Financial Officer at Genro Properties Group from China. So thank you all for joining us today.
Thank you.
Thank you.
Happy New Year.
Yes, Happy New Year. Thank you. Well, Daniel, maybe you can get started and tell us a little bit about how you see us set up for 2021.
Sure. I mean, obviously, Morgan, as you stated, I think specifically for the high yield space in 2020, we roughly were down around 35% vis-a-vis the previous year. I think, there was quite a bit of redemptions in 2019. A lot of issuers did pre-fund, et cetera. So we did see a record-breaking year in 2019. 2020 was a little bit slower. We did start off with a bang, but in light of what happened with the market and COVID, I think we did see a slowdown in the market. Now, for 2021, we've started off very busy. I think it's probably one of the busiest starts to not only debt capital markets, but high yield as well. From our just kind of calculations on redemptions, we see an uptick of about 35% in terms of bonds maturing this year from the Asian high yield space versus 2020. So our expectation is definitely that the market, as long as it remains open and it's conducive for primary issuance, it should be a pretty busy year and almost probably in line with 2019.
Excellent. Jonathan, do you want to tell us where you stand?
Morgan, thank you. Yes, well, it is very interesting when we sort of compare how we started last year with how we started this year from a green perspective, because last year volumes were very high, but in the early few weeks, it was almost as if many issuers were rushing to market and didn't want to pause to label their bonds in a sort of a green or sustainable format. Whereas, of course, this year, overall volume is very high, as you've said, and sustainable label deals very high. So we had 12 billion last week, first week of the year, in sustainable format, and obviously representation within that of high yield. I think the green, or the green portion of high yield remains, well, it was about 20%, I think, last year. So we had about 10 billion of green high yield through 2020, which was slightly up on 8.5 billion of green high yield in 2019. So green high yield grew. So I think there's sort of a message here that the sustainable theme is growing and growing across the markets, across the whole market. Of course, we had more than $500 billion across investment, non-investment grade, and high yield. And I think probably what we may have seen change is just how issuers going out now have recognized, because of the increasing focus on sustainability and ESG themes and risk, of course, of which of course COVID has been something no one can avoid. That has driven issuers to recognize there's increased importance of sort of distinguishing their issuance by emphasizing those sustainability issues, and therefore going in green or sustainable format. So I think we can, and it feels like it's a bit of a one-way street. Unfortunately, these things like sort of climate change, it's just getting worse as we put more emissions into the atmosphere. The temperature only goes one way, and the impacts just get worse and worse. So I think we will see, the markets continue to respond to that. We've seen valuations move in 2020. We've seen outperformance of ESG strategies, whether it's the performance of the equity stock of some of the issuers that we've got represented here. They've been outperforming in their sector, particularly in the energy space. And we've seen more broadly ESG strategies outperforming. A lot of that, again, driven by public policy, by financial market regulation. So I think it's going to grow, Morgan, is the simple answer to your question.
Thanks, Jonathan. Yes, if last week was any indication of that, I think we have a lot to expect from this year. We've had the Chinese property issues with green bonds last week. We saw the first transition bond in Asia, sustainability linked bond. So we'll definitely delve into that a little bit more today. Kailash, would you tell us about what your expectations are for the year?
Yeah, sure. I think I'll echo the views of the other speakers. Clearly there is the year started off on a very strong note. We had a few months of washout in 2020. Otherwise, that year also we would have been higher than 2019. But this year, clearly, we are expecting also that issuances would be on the higher side. As issuers, it's a great time for us because of the surge in liquidity globally, and that's obviously enabling us, to see spreads which have come down, which are now more reflective of the nature of our business, which is more driven by contracted cash flows. And it's the green theme also, which is really playing out in a big way. And if 2020 was higher than 2019 in terms of green bond issuances, clearly 21 will be obviously setting a new record. And we will find ourselves also at the sort of forefront of all this action. As far as the spreads are concerned, there was obviously massive euphoria post Biden win in late 2020, and I think that may not have been sustainable. And we've already seen the spreads actually inch back up, to a more stable level, which is more the fundamental value for some of these issuances. And I think that is one trend that we will see play out, where the spreads which had really compressed a lot, that will reach some stability as things go forward. And overall, I think given the overall positive theme on the vaccine development, the fact that the volatility is going to be much lower in the current year, obviously it's a great time for issuers to plan their issuances. For businesses such as ourselves, which are very dependent on capital being an integral raw material for our projects, because we are so heavy on capital expenditure, there couldn't have been a better time than this, frankly.
Excellent. Thank you. Yes, we'll get into your plans and some of our other issuers' plans later, talking about what's up for your funding next or this coming year. Kenny, you guys have already been out in the market. You started off straight away. How are you looking at things for 2021?
Well, first of all, we have a very successful issuance last week. And to be honest, if you look at the Sandro refinancing needs, is really minimal. We only have an offshore bonds that will mature in the 8 months, the size of like a $230 million US. But if you look at the whole property sector in China, I think it will be a very good year to us, especially to our peers, because right now I think the China government, I think more or less more supportive than before. Even though with the 345 or the 3 red lines policies, we don't see the central government try to cool down too much of the market at this moment. I think they still want the the overall property sector to have more market consolidations. That we, as one of the top 20 developers in China, I think we see that we have been doing very well, and then the central bank and the government are very friendly to those to the big players in the sector. And for the 2021, if you look at so if you look at our transaction, our bond issuance last week, we have a very good feedback from investor, and from the onshore banking support, I think is still very stable. So I think the overall China property sector, I think will still outperform when you compare with other business segment with other in China.
All right, thank you. Azan, can you tell us a little bit about what you're looking at from your perspective?
Thanks, Morgan. Yeah, I think when we entered 2020, we were there's a lot of challenges that we encounter, because I think 2020, the start of the year, we have seen oil and gas price was going down, and it has created a bad sentiment for all the oil and gas companies out there. And at the same time, the COVID-19 came and further disrupt the economy of the world. And I think at the same time, the political situation, not just in international market, here in Malaysia also, we do have some political situation happening in Malaysia, where the government change and so on. So it is quite a challenging year in a way for 2020. But however, when coming into 2021, we are more positive. We have seen oil price has improved over the past couple of days. We also seen some light at the end of the tunnel in terms of the vaccine for the COVID-19. I think that will help to improve the overall situation of the market. And of course, we hope that the political situation in the country also can stabilize further. So overall, as an issuer from Malaysia, I think we are positive in what is coming for 2021, and hopefully we can end better, especially in 2021.
Great, thank you. Annalisa?
Yep. Yeah, I think I'm going to echo a number of the comments that were made previously. I mean, I think from our perspective, from an agency perspective, our pool of issuance is quite a bit smaller than some of the numbers that were just thrown out. We did finish last year at about 38 billion of rated issuance, so that is down from the prior year's level of record of over 50 billion. I think our expectation is that obviously there are quite a backfill of upcoming maturities. We've got, I think, across our rated base about 25 billion. So assuming that gets done, plus we're still going to see issuers taking advantage of the lower rates for longer. Some are going to be doing liability exercises. Some are going to be pulling forward some of those maturities that are coming due in 22, 23, refinancing them now, hopefully, and taking advantage of that. And I think the other thing is that we're probably going to start to see some M&A activity. And that will probably bring in some additional issuance. I will say, we are still seeing some credit differentiation. So it's not everybody that can access the market. We're particularly seeing that in China. And we can even differentiate between, I think Kenny was talking about the China property market. We can even differentiate between property issuers within China. We know that some are still going to be able to retain and maintain access, but there is going to be some pullback. And I think investors are still going to be selective as they can be during this time. So in terms of issuance going forward into 2021, yeah, I think I think our expectation is it's going to reach 2020's levels. Does it fall higher than 2020's into the 50 billion that we saw a couple of years ago? I think that's still. I think I'd probably like to take another quarter look, because last year, if you'll remember, at least from a rated perspective, even though we had $37 billion of issuance, the majority of it was done within the first quarter. We had nearly half of that done by March, and it was really January and February. So we'll have to see sort of where we go over the next couple of weeks into the first quarter. I'll probably come back to you with a revised outlook, either positively or negatively. It's back to you, Morgan.
Excellent. Thank you. Yes, a lot more that we can delve into there. I'm glad you brought up some of that selectivity that we will see. That's certainly something that we know is characterizing the market, even in spite of the onslaught of issuance we saw last week, and it was well received. It does sound like there's still differentiation to talk about. Niraj, can you tell us a little bit about what your outlook is for this year?
Great. Thanks a lot. I must say it's actually always very difficult to go last because first I can say I would agree with pretty much all the speakers, but let me try to bring it back together, at least my simple summary. And starting with the overall view, we are positive on the high yield markets in Asia. We do expect the supply to be robust, but the demand to be actually strong on the other side. And I would say if you take a step back and think about the world we are living in right now, especially in the post-COVID world, you see a lot more debt in the system pretty much everywhere, but you see a lot more of low-yielding debt. And one of the challenges that actually is going to face a number of investors globally and not just in Asia is to find yield and income. And I think that's where Asian high yield actually fits pretty well, in my view, in terms of providing that yield. And with still a fairly positive fundamental and a macro backdrop and a relatively modest expectation from a default rate perspective. So overall, when I bring it all back together, I do expect the supply to be robust, more in line with, or maybe slightly higher on a gross level, but in line in a net level with 2019 or 2020. We do expect the default rates to stay stable. And the other two things which are relevant is obviously we do expect the bifurcation to stay to some extent in the market, which is you don't see that same uniform recovery since March of last year, and we've seen obviously the higher quality names recovering much faster. And last point, which obviously Jonathan touched on, and it came in a few other discussions, is the sustainability. I think it's going to be a critical area of focus for a number of borrowers in the region to get their overall head around and figure out how do they actually meet the sustainability requirements that the investors are going to actually ask for. So positive backdrop in terms of the issuance. I think the demand side actually should remain robust.
Great. Let's dive into the bifurcation and some of the differences in the market. We have here today 3 different issuers from 3 different countries, 3 very different businesses that we can talk about. From an investor perspective at BlackRock, where do you see some of the interesting investments? Are there any particular sectors, countries that you think have recovered well in the wake of COVID? Anything that is looking like there's particular value?
Sure. So overall, again, looking through the region, you have seen the recovery to be not very uniform across the countries and the sectors. And the implication of that, when you think about country and sector as a unit of risk, I think that's still obviously something which is important to keep in mind. From a country perspective, we're seeing more of a V-shaped recovery in North Asia compared to South and Southeast Asia, which is quite visible in the data that we are seeing. The growth rebound, the overall economic activity. Now, from a risk-adjusted return perspective, I would say you still see value in number of areas. Obviously, needless to say, there's always a bottom-up fundamental analysis on a security level one would need to always do. But if you try to bring at a sector level, China from a country and then Chinese real estate high yield from a sector level still seems to be relatively well positioned. There's in India, some of the renewable power names still are in demand, although I would say the spread have gotten tight over the course of last few months. And then selectively, some of the higher quality issuers, the high yield issuers in the rest of the region. So we do see a number of spots where there's value. And what you would need to think of is obviously how you build a portfolio with some of the most stable carry names with much longer horizon of your holding view, and versus some of the names which might be slightly higher risk, more in the middle of the high yield spectrum, where you have potential for spread compression over the course of next 12 months. But overall, I think you have a few of these spots where on a risk adjusted basis, you see attractiveness at this point.
Great, thank you. Kenny, I know it's always gangbusters for China high yield property. What do you think is supporting that part of the market? What are some of the conditions, the backdrop that help that build out in 2020 and going into the start of this year?
First of all, I have to thank you, BlackRock, for their generous support in my deal last week. Make it very successful. Okay, so to be honest, if you look at the China real estate performance in the last 12 months, is very successful. You know that we suffer from the COVID last year, but so many of the sales center were forced to shut down. But if you since last April, we were able to recommence our business, and the overall momentum was very overwhelming. You know, so if you look at even not just as Zenro, overall all the top 30 developers contracted sales are very good. We even able to make a very healthy growth. So I think the overall solid demand in the domestic market give us very good support. And the second is, I think you know, because of the strong liquidity in both onshore and offshore, give us a very strong funding support. You know, so if you look at other business segment, like the export and import business, or like the F&B or the retail, they are not doing very well. But for China real estate, because it's a very solid business to investors, and even is a very good investment opportunities for home buyers, so that it gives us a very strong rebound since May last year. And I think that in this year, I think the China government is still encouraging the developers to do more market consolidations. So I think from a credit perspective or from equity perspective, they're happy to see this kind of market consolidations. Like 10 years ago, or even like 7 years ago, the top 30 developers, on average, the contracted sales were less than 10 billion US dollar for the contracted sales. But if you look at this year, even the top 20 developers were able to achieve a contracted sales of like at least 20 or even up to 50 billion US dollar. So we are happy to see this kind of market consolidations. And with this kind of market consolidation, it gives us a more market share, and then it helps us to secure financial resources, both onshore and offshore. So for 2020 or 2021 onward, I think that the top 30 or the top 50 developers would enjoy this kind of market corrections or market consolidations. And I don't see the central bank or the central government will have more cooling measures. So that's why you see the first week of January, overall, all the China property developers, the respective bonds, they outperform the whole sector.
Excellent. And which property developers in China are struggling? Clearly, not everyone is getting out there and having the success that you've had. What characterizes the ones that are having a harder time?
First of all, I think the smaller players will definitely suffer more, because as I previously mentioned, the China government wants. First of all, you can see that the latest policies, you know, for central banks or all the commercial banks, the central banks gave the commercial banks a very clear instructions, right? They want them to cut the high reliance on China property business. So they just want to support. So I have a feeling that the commercial banks would like to support more the bigger players. So the smaller players, I think they will just be squeezed out. But what we really want to re-emphasize that the default rate in China property sector let them be more consolidated, or let them be merged with a bigger player. So I think in the short, in the next 12 to 18 months, we will see more market consolidations in my universe. And I think that the top 20 or the top 30 developers in China will share more than 50% of the market share in the next 12 months. which is very healthy. Which is very healthy in my opinion.
Okay, thank you. Daniel, what are you seeing from your perspective as you work with clients? Who do you see as having an easier time coming to the market at this point? And what are some of the areas that may be a bit more challenged? Oh, we've got you on mute.
Apologies, forgot to mute. I think similar to what Kenny was saying, I think the market's pretty bifurcated. I think the issuers who are able and who have come out to the market are really the well-known, frequent issuers that are, have issued throughout the years. Investors are very, well informed of the company. They do a lot of discussions, work with IR teams, etc. Frequent bars, and then the issuers who have kind of looked at more private style club transactions, not widely distributed to the wider investor base, but really more to relationship banks, etc. I think those are probably the entities that right now are probably having a current harder time in terms of tapping the markets when we talk about purely just the China CRE space. And then when it comes to, I guess, issuers from other jurisdictions, there's always that comparison of where offshore dollar funding rates are vis-a-vis their onshore rates. And I think if you look at the secondary levels of some of the issuers more in the Southeast Asia region, it's taken a little longer time for those to have somewhat come back to where previous levels are. So I think the offshore markets have been a little bit more expensive for them versus domestic markets.
Great, thank you.
Can
Yes,
I ask a
go ahead.
question? Because I think one of the things that we see from our perspective is, and I agree with all the comments that were just said, but from an issuance perspective, we don't see a lot of new issuers, right? I mean, that's the reality. And when we do see some new issuers, they're coming out of China. We haven't seen. I mean, we just rated Grab earlier this year. And they're looking to do a term loan B. But that's probably been the first new issuer out of South and Southeast Asia for, I would say, 15, 18 months that we've rated. I mean, it may be different from the other agencies. So I think one of the struggles, and I think maybe this question goes back to Niraj in terms of looking for investments and yield and that sort of thing. I mean, we've got a market and we've got investors that are very knowledgeable about China property because that is where the depth of the market is. Everything outside of that, there's not a lot of depth, right? If we talk about India, if we talk about Indonesia, Indonesia's got some manufacturing. India's obviously got auto, oil and gas, and other. But the opportunities for investors to diversify outside of China property, my question is, when are we going to see some new issuers come to market? This is still 2021, even though we're off to a bangbuster year, the first 10 days of this year, it's really questionable in my eyes as to where are we going to see more depth, because that's really the only way that this market can continue to grow. So that was just sort of my little pontification about sort of issuance and other. But I think it's really challenging. I mean, I was hoping, maybe this year we can get there, but still there's so many challenges. We can talk about earnings stability. We can talk about earnings sustainability. Will a vaccine come through? Will governments be able to manage the pandemic? Will fiscal and monetary policies be there? All of these things are big questions. And then we keep saying there's still 75% of the issuance last year came out of China property. The majority of it this year already is China property. So it'd be nice to get some diversity. Not that I don't like China property companies. Nice to see some diversity outside. Kenny, don't take that personally, but really, we've got, yeah. So it would be interesting to hear other people's thoughts on that in terms of, will there be some diversity and opportunities away from China property this year?
I'm fine with it.
Assuming sort of a base case scenario where we do see, vaccinations come through and other things, because we'd like to see stuff outside of China property.
I think it's a very valid point, and I think this is something which a lot of investors would actually welcome. But taking a step back, and there's a reason why you don't see as much of the issuance for other countries, especially in the high yield part, is a combination of the regulation, the competition from the banks in terms of the cost of debt, and also in most cases the cost of hedging if you are trying to obviously swap it back. Now, first thing in terms of regulation, now India is a classic one where if you look through the last 10 years, I think 10 years ago, India, China were pretty close in terms of part of the index. And now India is little over 6%, whereas China has 51% of the overall Asian credit index. So there's something that happened over the last 10 years where you had significant gross issuance out of China, but not as much from India. And obviously the relative cost of debt between the banking system and the capital markets obviously plays a role. The cost of hedging for INR has always been high. And lastly, to make things complex, now regulations also haven't helped. When you look at the case of India, Indonesia, a few other countries, you do have those regulatory constraints. So for example, in India, under the external commercial borrowing, you have a cap that the regulators put of LIBOR plus 450 basis points. Now that automatically, when you think about high yield market, you're saying less than 5% coupon in today's world, that automatically takes away a lot of the mid-sized players because the market clearing price will be higher than that. So I think it's a combination that still plays a role. I don't think that's changing. What does it mean in the nutshell? I would say more of the same. I don't expect a major shift in terms of the issuance patterns to tilt very much far away from China real estate or even China high yield in general.
Yeah, I mean, I echo that. I mean, Annalisa, HSBC has a very broad customer base across Asia Pacific, and my team, along with our ratings team, is really knocking on the doors of many of these clients, pitching rating exercises, as you probably know well, and the high yield bond markets. But in the end, the real issue is cost, and these companies are getting much cheaper financing either through the domestic bond market or the domestic loan market. Yeah. And as Niraj mentioned, the swap market, the cross currencies market is not liquid, very expensive. For example, a Vietnamese corporate who has no assets overseas, purely dong, for them to borrow a dollar and swap into VND is just very, very expensive, right? Yeah. So, hopefully, these issues that these companies are raising, go away over time, and we start to diversify more away from Kenny's world. But we are trying. We are trying very hard to do that and provide a more wide breadth of investments for the likes of BlackRock. But it is very hard from a cost comparison perspective.
Yeah.
So I guess more money for Kenny for the time being. Yeah.
Let's do a tap next week. But to be honest, in this kind of market, investors prefer more they like a heavy asset business model to a certain extent. So in time of dark days, we could still sell assets, right? So if you are doing like asset-like model, so when things happen, from credit perspective, they have nothing to offload, they have nothing to sell and nothing to offer. So I think investors these days are first smart. So they just want to have, they prefer like a heavy asset business model from my perspective. So I think China real estate, no matter the market is in good days or dark days, we still give a comfort zone, or we give a very comfort harbor to investors.
Kailash, what are you seeing as the challenges for you and your compatriots as you're looking to come into the dollar market? Are you struggling with that price cap, as was mentioned? Is there anything else that could hold issuance back?
Okay, to be very honest, all the cooling measures in China are not a new topic to investors. Price cap, price restriction, or mortgage restriction, purchase restrictions. They are not a new story or new headlines to investors. But the problem this day is the 3 red lines, right, in China. China government or the China Central Bank, they want China developers to start doing the leverage activities. But some developers, they couldn't do it at once. So that's why they would prefer doing more off-balance sheet financing. Maybe they don't give guarantee at a specific time or specific period. So this kind of off-balance sheet financing is getting more tricky. If they do it like off-balance sheet and they don't do any announcement and they do any they don't do any full disclosure, it will be very difficult to investors to find out how much debt they have. For Sandro, also thanks for the help of HSBC, we did a private placement last week. It's a kind of, but even though it's an off-balance sheet financing, we still voluntarily disclose the details to investors. So I think these days, I think that the transparency is very important. So investors, they hate uncertainty. So as long as you give a kind of a certainty or make it more transparent, then I think the investors will be more happy.
Yeah, sure. I can answer the question also. From an India perspective, Neeraj is right. The regulations are fairly restrictive for small or mid-sized companies to access the market. We have done a few issuances under those regulations, but given the collapse that we saw in the LIBOR levels itself, where the cap was linked to the LIBOR plus 450 basis points, we are seeing currently the cap being at around 5%. There are ways around that. You have to do some sort of repack structures. They may not be the most efficient from an issuer perspective, but from an investor perspective, we can achieve a reasonable outcome. We tried to do a similar issuance on that basis in October last year, and that was fairly successful. So, while the cap is there, it's restrictive, but, for a repeat issuer like ourselves, we don't find that to be a constraining factor. And the good news for us at this point is that the spreads have actually come down to below 450. So even from that point of view, given the entire uh, angle to our business, which is ESG focused, front and center, in terms of the green initiative, sustainability, governance, everything else. And then at the same time, we are we were not as much impacted by COVID either, because the renewable energy sector does work on the basis of a must run status, which means that even when the power demand fell off a cliff, we were able to sell all the energy that we generated. So in a way, it's like a take or pay sort of a thing, and hence most of that energy was off taken by the distribution companies. And that also then found a lot of favor with the investors, because in these uncertain times, then if you are not impacted by external events, macro events, then obviously it's better to just invest in issuances which come out of this space rather than any other space which may be more impacted. Things like the retail sector, the hospitality, real estate, those sort of things. What also we have seen the trend from India is that the issuances are increasing, and there is diversification also which is happening. We are seeing new sectors come to the market. We did see in 2020 a retail company come and access the market. We did see a lot of non-banking finance corporations access that market. Renewable energy companies have been accessing the market since 2017 on a regular basis, so that continues. But we are seeing other sectors also come in. Overall, in India, the capital market is reasonably existent for largish companies, which are those companies itself which find favor with the dollar bond market also. So hence, the cost differential does come into play. The hedging costs are on the higher side between the USD and the INR, and hence keeping that in mind, it sort of limits the amount of issuers who want to sort of then access the dollar market. So yeah, that's what we see about this market.
And do you generally find investors to be interested in these Indian credits like yourself? What kind of questions come up as you guys head into the offshore market?
Yes, with the offshore market, initially, we did have to establish our credentials. There was the questions around the PPA renegotiations, and what is the legal system to protect against that. There are the questions around the receivables, because in India, the distribution companies are all state-owned, and when if you have a power purchase agreement with the state-owned off-takers, then the receivables are typically on the higher side. But we did come around, explain the investors, that these contracts are honored always. the payments eventually come. They may get delayed by 3 months or 6 months, but eventually the payments are made. And the central government has been supporting, has been bailing out these distribution companies on an ongoing basis. So those are some of the initial humps, that we had to get over from a credit point of view. Currently, the questions are more around, what the structure is, and let's just get it done type of a thing.
Great, thank you. Well, switching things to Southeast Asia, Azan, can you tell us a little bit about how things stand in your neck of the woods? What are some of the challenges that you and your fellow Malaysian issuers may face in coming offshore? Oh, we've got you on mute.
Sorry. Yeah, I think in regards to as you can see, there's not much issuance coming around Malaysia. I think one of the main reason is obviously there's still a lot of liquidity in the local market itself, and at the same time, the rate or the cost of debt coming from Malaysia is still lucrative as compared to if coming from to the outside. I think if we look into 2020, there's a lot of disparity in terms of cost of debt if we issue it in international market as compared if we raise something domestically, and even we include all the cost of debt is still cheaper actually to raise domestic. However, we do also, as a company like Serba, we also wanted to be recognized in the international market. That's why back in 2019, we did our first issuance mid of the year. And again, we came back into the market end of 2019. But of course, after the situation that's happened in 2020, we have seen that cost of debt for us to issue in international market is higher. And that's why I think we take this opportunity also to do what we some liability management, where we pay down or buy back some of our sukuk from the international market to actually tap into the lower cost of debt from the domestic market itself. So I guess that is how why actually a lot of local players are actually not. You don't see much coming from Malaysia because of that main particular reason. Other than that, I think in terms of regulation, incentive is something that we can always explore. But I think ultimately being an issuer, cost of debt is something that everyone look at to ensure that we improve the profitability of the company.
And did the market changes last year and the onset of COVID affect your funding plans in 2020? Did you change your approach because of what was happening in the market?
Obviously, I think last year we have the intention to go back into the market, but because of what happened, we don't see that coming into the market, USD market is really beneficial to the company. We did, like I mentioned, we did some liability management. We were able to raise from domestic market to pay down some of our borrowing. And I guess it helped to improve our overall activity. So yeah, basically that's how we foresee. That's why, yeah, in a way, I would say that it does hamper some of the plan for us to go into the international market. But I think that's why from the earlier presentation, I did mention that hopefully 2021 will be a better year, and we hope that we can come back into the market and tap into a very good bond market in the international market.
Excellent. Good. Well, hopefully we will see you out at some point this year then. I want to make sure we have time to talk about the sustainability market and green bonds since we've already very quickly gone through about 45 minutes of our time. Jonathan, why don't you start us out and tell us a bit about why we're seeing all these green bonds coming out now? What's changing in the market that's driven some of this?
Well, I think we talked at the top, Morgan, about how fast these markets are growing, and it's growing across the whole market, including the high yield space. I think in a sense, the rationale for why is reasonably straightforward. If we look at the key sustainability issues, something like climate, this increasing recognition that we have, global society has a very serious problem, and we need to shift capital, put capital to work in sort of decarbonizing our system. Otherwise, we risk pushing temperatures to a level where we, fundamentally and perhaps irreversibly destabilize or even lose control of the environmental systems that we depend upon for the whole of the existence of our society, and it is that serious. We've seen governments through policy and financial regulators starting to raise the bar, raise the challenge very significantly. We've seen asset owners, many of those that Niraj services and on behalf of whom he manages, demanding that monies are invested responsibly, and also a concern that obviously as we go through and into this transition, one way or the other, if we're either successful or unsuccessful in transitioning, there's going to be big value shifts. So there's huge risk, however we look at that. So I think that's heightened it. I think in 2020, obviously along came COVID, and sort of really beyond all reasonable doubt said, don't imagine these issues are something that again, might arise tomorrow. They're here and now, and in the most dramatic way. We saw the impact of those on economic activity. We saw what I might call a forced, unscheduled transition to a lower carbon system, which obviously had huge impacts on many sectors that the representatives from the issuers are obviously all talked about. In our world, my suggestions to my syndicate to saying, can't we do low carbon roadshows for green bonds, suddenly came, well, we do low carbon roadshows for every deal now, and we've been forced to do that. So we've been forced to change, and we can all envisage, how that has flowed through, whether it's F&B or hospitality and transport, of course, massively impacted. And then I think we've seen governments respond to that with not only the lockdown and the need to move capital to address the consequences of lockdown, and that gave a huge impetus to social labeled issuances. So in 2020, I think in Asia Pac, social and sustainability issues were more than, in total, were more than the total for green. So that was a big shift, whereas in 2019, it was maybe only 10%. We saw governments coming through with sort of build back better or green recovery type programs, recognizing this was an opportunity to shift. Climate change probably was a driver or is a driver of the increased probability of nasty pandemics taking hold, in addition to other impacts. Very difficult for any corporate to sort of turn away from responsibility for dealing with these. And then I think at the same time, what we'd also seen, the other big sort of thing to emerge was, as we seen, particularly if we just look at the sort of the electric power sector and the business of Kailash and others across the region now, in most markets, not all markets, but in certainly many and probably most, renewable energy is now it's the financially smart thing to do. So the subsidies aren't needed in most markets. So there was then a sort of shift in focus to say, well, what next? And the sort of turning to address some of the more, what the Europeans describe as harder to abate. I don't particularly like that phrase. But some of the sectors that are more beyond energy, so looking at energy consumption in cement sector, in iron and steel, and of course other energies in oil and gas, so into Azhar's area. And so we've arrived in a big conversation in 2020 that you referenced at the top, Morgan, around transition and transition finance. So how do we start going beyond green and looking at how do we message appropriately? What is the right approach to identifying what is good transition and what isn't? And then how is capital now following that type of guidance? So, we've had transition bonds out in the market for a little while. In last year, towards the end of last year, we had the transition guidelines coming out from ICMA that talk about, some of those less clear cut, I would say. I'm not sure they're necessarily harder to abate, but less clear cut what the transition pathway is, guidelines around that. We'd also had a huge growth, mostly driven by the loan market of sustainability linked products. So where there's a sort of a financial incentive for the borrower in the loan market, and now with sustainability-linked bonds in the capital markets for the incentive for the issuer to meet specific and relevant and ambitious sustainability-linked KPIs. Those markets have grown. The loan market's certainly grown very quickly, 170 billion last year, and we've now seen a dozen or so of these bonds since the principles for sustainability-linked bonds were issued in 2020 June. And I think we will see, increasingly this will play not just in the high grade, but also in the high yield space as well, because the issues are very relevant. We're seeing more specialty funds on the buy side emerge, and so that's encouraging people, I think, to adopt and comply to these principles, and therefore the label bond market makes sense. And we're also out of Europe now seeing regulation coming in around definitions and the EU taxonomy, and money managers being required to report against sort of levels of compliance against that taxonomy, and therefore getting that right, communicating that when you take your deal to market is going to be a key way to make sure that you're going to get the the European bid into your transaction. So I think it'll grow. The themes are changing. The story is getting more complex as we go across all sectors. So I think the onus very much on us is to help our our sell side clients get the right structure, tell the right story, pitch it well. Don't oversell your greenness, because that can backfire. As we're seeing more increasingly, there's a very loud and noisy and vociferous media and NGO community who are focused on this. So you need to get that balance right. So it's an increasingly complex world around getting sustainability right in your fundraising programs.
And Neeraj, from the buy side point of view, are you seeing this developing appetite as well? What do you see as far as differentiating between some of the sustainability related products that are out there?
So I think overall, so Jonathan touched on a number of very important points. I think the key here is the awareness, the demand, the overall focus is shifting dramatically. So if you think in a broader context of ESG, I think it's one of the trends which I would say was already in play and it was happening, and it really has gotten accelerated by the whole COVID shock over the course of last 12 months. So you do see the clear demand coming through from the client's perspective. When it comes to Asia, you can imagine some of the challenges are not that unknown. So you still have obviously challenges with regard to the data availability. How do you actually measure? But the fact is, it's actually, if you look at the issuance patterns, it's moving in the right direction. And one thing which is quite clear, I would say there's certainly a lot more of a focus. If you go back in past, it was mainly governance, then it has started becoming more environment and now the social. And I think this is critical for a number of these businesses to actually have a social license to be able to operate in these markets. And the other part, which is quite natural, I would expect, is that as we start to focus on these aspects, the sustainability and the broader ESG, it will start to shift the capital pools in terms of diverting capital in certain industries versus the other. It'll start to change the cost of capital. And that itself obviously will have implications in terms of the cost of capital, the return on that investment. So in a way, it's a virtuous cycle which has started. So I don't see this reversing in any form or shape. It's only going to go one direction.
And Elisa, from your point of view, is looking at these types of products, do you look at them differently than a conventional product? Is this something that could have an impact on ratings or an indication of the overall performance of a company?
No, I mean, I don't think we differentiate in terms of our criteria from a credit perspective between a green bond and other. I think one of the questions from my perspective that continues to come up with these green bonds, because we did obviously see a couple of them come through last week even for a rated issuer base, is how how they're monitored in terms of use of proceeds for such projects and initiatives. I think that's probably going to be one of the questions that I just have personally outside of my role from Moody's, in terms of how do investors and how do we all get comfortable that proceeds are going to the desired uses that these companies state. I think that's one of the questions. I think, our expectation on the green bond front is we are going to see obviously more issuance through this year. I think we're probably going to see a little bit more of it on the infrastructure side before we see it delve into some other sectors. But again, I think I'm probably posing a lot of questions here, and I apologize for that. But one of the other questions that I have is, we've got Indonesia, right? Indonesia coming up. They've got a number of maturities. We've got the decarbonization from the banks in Indonesia. Will that be a pocket of opportunity on the green bond side? I don't know. I think that's one of the things I think we'll be watching as well. Back to you, Morgan.
Great, thank you. Kenny, from your point of view as an issuer that's not in a traditional green industry per se, it's not an obvious one to sell a green bond, but you have sold a green bond. Why have you sold one? And as Annalisa was asking about kind of the follow-up and seeing how the proceeds are put into place, how do you see yourself doing those reports and making sure that the proceeds are used in the way that you indicated?
To be very honest, the topic of green bond is not a new topic to us. Even like ESG, for Hong Kong listed company, as I previously mentioned in another roundtables, that all the Hong Kong listed company are required to file a ESG report on this with the stock exchange. And the green bond, I think, and then if you look at for the green stuff, the green related stuff, I think if you look at the China local government policies, in order to build like grade A or nice building or nice residential projects in the domestic market, you have to fulfill like many local green related requirements. So like for our headquarters in Shanghai is a green rated building in Shanghai. And then for our projects attached with, for the residential project attached with our headquarters, they are also rated green related projects in Shanghai. We have these kind of green policies like almost 5 years ago. But I think the fans for the capital market, these kind of ESG related bonds or the ESG fund suddenly came out last year. So we checked with our investors, and then we think that all our existing ESG requirements or the green related requirements does fit with their requirements. So it's a perfect match to us. So that's why we start doing green bonds. So it doesn't mean we start doing green this year or last year. We have been doing this green related stuff for many years. But I think just the ESG fund or the ESG related funds started to become more popular last year and give us a very nice opportunity to diversify our funding channel. And so that's why we have more investors these days. If you look at our transaction last week, we have over 300 accounts in our order book, and almost half of them are related to ESG investors. So I think that we are very committed ourselves to ESG and green related stuffs. But I think we don't do it recently. So I think we are very supportive, and we still want to stick with the ESG requirements. But definitely, it's not a new topic to us. I think that just fans for the new market requirements and then the new investors requirements.
Well, we are unfortunately short on time. So to wrap things up, I'm just going to go down the line and have each of you tell us what one word or phrase you would use to characterize the theme that you will be most closely watching or that you think will be characterizing 2021 for us. Daniel, would you like to start?
I guess the theme for me would be actually the further development of the high yield market. I think we talked about it earlier. I like to see more sectors, new issuers come out in the high yield market, and fingers crossed, but there are some positive signs that may happen this year. I know that was more than a couple words. But,
it's all right. I appreciate
yeah.
the explanation.
Yeah,
Thanks.
thanks.
Niraj, I'll let you go so you don't have to wait till last this time.
Thank you. Search for income. I think it's going to get more profound.
All right. Excellent. Jonathan?
Transition to sustainability.
All right. Great. Kenny?
Well, it's really hard to to summarize into a short sentence to me, but I think the market consolidations and then the sustainability they become more hot topics in my sector. But I'm still cautiously optimistic with the overall capital market in this year, because the liquidity is too strong, and investors they are still eager to look for returns. And so it gives us a very good market. It will give a more good market window in the rest of the year.
Azan?
I think I would say that I would like to see recovery, especially in the market, and hopefully, like I say, we can come back and maybe issue and create new issuance to the market as well.
Great. Kailash?
Yeah, thanks. I'll say it's a clean energy transition globally, and record green bond issuances, for a better climate.
Excellent. And Annalisa?
I'm going to stick with credit differentiation.
Excellent. Well, thank you all for joining us today. We've covered a lot. I had a lot of questions that we didn't even get to, so I think we did quite well. Thank you again. Hopefully we'll be able to continue this conversation throughout the year and see how things shake out.